Now we're going to explain why adjusting entries are needed. So adjusting entries are prepared at the end of the accounting period to update accounting records before the financial statements are made. They assign revenues to the period when the revenues were earned, and they also assign expenses to the period when they were incurred, which means generated. And they will update asset and liability accounts. So these adjusting entries are needed to properly measure a few things: net income, assets, and liabilities. So if you forget to do these adjusting entries, because net income will be incorrect, your income statement would be incorrect, and because your assets and or liabilities would be incorrect, your balance sheet would be incorrect. This will become more clear about why this is true when we get into the details of the various types of adjusting entries. So let's go over some adjusting entry rules. First of all, adjusting entries never involve cash. So if you're ever doing an adjusting entry and you have cash involved, then you know you're doing it wrong. Every adjusting entry either increases revenue or increases an expense. Also, at the end of the accounting period, anything that has accrued must be recorded. Accrued simply means something has accumulated but has not yet been recorded, such as depreciation or salaries owed to employees, but the employees have not been paid yet. For example, let's say employees are paid every Friday, but the end of the year ends on a Wednesday. The employees have not been paid yet because they won't be paid until Friday, which is the next year. So on Wednesday, which is the end of the year, you need to show how much salaries you owe and then also record that as salaries expense. So how often are adjusting entries needed? Well, before a company can create its financial statements, it must enter adjusting entries into the journal. So anytime the company needs to do its financial statements, it needs to do adjusting entries to update its account balances. So most small and medium-sized companies do adjusting entries at the end of the year on December 31st. If they don't, then their financial statements will be incorrect and therefore their taxes will be incorrect because the calculation for taxes owed relies on the financial statements. And then large companies like Microsoft and Costco have to release their financial statements quarterly if their stock trades on one of the national stock exchanges like the New York Stock Exchange or NASDAQ. Therefore, they have to do adjusting entries at least quarterly. And where do we enter these adjusting entries? In the journal.